Morning, Fractal Effects team. We're just following the market from the early session, so please make sure you read the disclosure in the footer section of fractaleffects.com before we get started. If you're following along with us today, make sure you do in a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. So we have inside the range model. That's where Asia is inside London. Usually we sweep both sides, which we have. We have divergence here, where US 500 did not sweep London lows. There's our manipulation move right there to the downside, and it's a clean MM. And there's our first 5M fair value gap. That's going to be solidified in the next 43 seconds. I'm looking to bounce off that and go for the 4-hour fair value gap up here. And depending on where we get it, maybe this will be our low-hanging fruit, will be the manipulation move high. We got to proceed with caution. This is not my favorite model. This is very similar to the trumpet model and the spotlight strategy. That usually takes out both sides, but it keeps going back and forth. There's our 10 a.m. candle. That's the first candle that's presented when the next 4-hour fair value gap, next 4-hour candle begins. And it just happens to be our first 5M fair value gap. We're up against a purple zone, so we might push down here, tap here, and then go up. But currently I am bullish. We're green across the board here on US 500. US 500 is the stronger pair. As mentioned before, it did not take London lows. So we want to see what it does in here. Remember how divergence works. If you're looking for a long position, you want to do it off the stronger pair. If you're looking for a short position, you want to do it off the weaker pair. So right now, as much as I'm not a fan of trading US 500, this is the stronger pair. So we want to see the market come back into here. We want to have an immediate rebalancing candle, a green one, and a 1M fair value gap created and tapped. But if it punches right through and gives us a double break, then that means this is US 500 turning weak and following in suit with NAS. So this is technically the last stronghold. We've already hit a 4-hour fair value gap down here. So this is the last stronghold for a bullish play. Last stronghold of the bulls. If this gets punched through, we're going all the way down here to the bottom of the weekly range and previous day's low. Also a daily fair value gap. But this is where everything will be decided. We're either going to go up or down from this fair value gap. Did we already tap it? Remember to zoom in. Make sure your fair value gaps are painted properly. The indicator paints it out for you, but I like to have an actual visual representation of it so I can go drop down into a 1M. And it's still there. I wouldn't really call that a tap. Another way to tell if a fair value gap has been violated, meaning that the market is disrespecting it, is once you have a candle bounce off of the midpoint, the consequence encroachment, and you see it wick, then technically we should not see another candle close over that wick. And it could still bounce maybe 6 candles off this and go up, but that makes for muddied waters. This has to look obvious. This has to look clean. Otherwise, we're not interested. The muddier it looks, the more manipulation there is right now happening. That's the last market you want to be in, a heavily manipulated market. So 1 minute, 14 seconds left. I want to see this candle wick. And I don't want to see the next one close over that wick. So I'll turn the blue zone off here just to show you guys. We need to touch the midpoint. Here comes US 500. Fifteen seconds left. So it's this next candle. It's going to tell us more information here on NAS. Do we close over that wick? So the wick is pretty much right at the bottom of the 10 a.m. fair value gap. I want to see if this next candle closes over it, or if it just wicks as well and goes up. And in that time, if we get a double break, that's the dealer revealing their hand. I am not interested now in buying this market. Let's go back up to the 5M here as well for US 500. Remember, this is it. This is the last stronghold of the bulls. We're right inside the DSD high and low. They're right on top of each other. So we're getting some rejection, 2 minutes, 20 seconds left. So we're still getting rejection there, 22 seconds left. See what's happening on the 1M. No 1M fair value gap created yet. It's a big wick. So this candle did not close over the wick of the violating candle here. It's a good sign. Now I want to see a 1M fair value gap created and tapped. We're also at 10:30, so I want to see a bullish confirmation as well. Remember, there's an 80% chance that we are going to retrace back into the dealing range after we get a confirmation. That means you want to wait. Zoom in and paint it out. Now, same thing. This is a violating candle. We've hit the consequence encroachment of this 1M fair value gap. The next one should not need to close below this wick. Let's see where this one closes first. We got 15 seconds left. It's all about where this one closes, above or below. Ten seconds left. So the low-hanging fruit would be the blue zone, 20 EMA. US 500, taking out these highs, most likely heading for these. Starting to get a bullish confirmation on US 500. Let's see if it sticks. That'll solidify the deal. There's our bullish confirmation. So we have a clean MM. We have our 5M fair value gap that was tapped. We could go all the way back up to the NYC fair value gap here. But most likely, as soon as US 500 hits this 4-hour fair value gap, it could reverse. So you got to proceed with caution. Match them up. As soon as this hits 4, remember, as soon as one diverging pair hits A higher time frame PD array, you got to treat it like the other one did too. Take your TP there. Or at least take partials and move your stop losses. This is the low-hanging fruit though. Blue zone 20 EMA, DSD low and high. Doesn't really make for a 1 to 3. There's a lot of resistance here. Doesn't mean it can't just punch through. We're definitely going to get a reaction as soon as we hit this 4-hour fair value gap. We could punch right through it. But as mentioned before, this is not my favorite model. Inside the range model or trumpet model, these models are very erratic. They like to go back and forth sweeping liquidity. It becomes just a range, but just a bigger range. That's why I'm more interested in this area right here, the blue zone 20 EMA, DSD low, and then on the US 500, the 4-hour fair value gap. We're also at all-time highs. Got to proceed with caution. A buy model is still kind of scary. When you get a buy model at all-time highs, you've already broken all-time highs. Unless you know how to forecast where the daily standard deviation is, which is also a prediction, to kind of give you an idea of where the market wants to go. We've already painted that out. We teach you how to do that. It's up here. That's the daily standard deviation high. So this is where that's past, there's the all-time highs. Here's all-time highs. Here's our daily standard deviation high, meaning the market, if it's bullish, is going to continue here, have a reaction off the midpoint of this, and then drop. So how can we forecast a point that doesn't even exist on the chart yet? Like, this is past all-time highs. We teach you how to do that. So in the higher time frame analysis. Get rid of this for a second here. So mark, you want to come back in here, dip in here, maybe even here. So we're hitting that 4-hour fair value gap, which aligns perfectly with our blue zone. So we could get a reaction here. Let's see. Remember, once you get to 2 standard deviations, 2R, you roll the stops anyways. So as soon as you hit this area, if you want to continue to let it ride all the way up to the New York fair value gap, you got to roll your stops and make sure you take at least half, close out half of your position there. And you can let the rest ride all the way into the NYC fair value gap. I believe there's a blue zone. That's the strongest blue zone, actually. So right there at the DSD low, that's where you would roll your stops and take close out half of your position. Again, you want to proceed with caution. All-time highs, US 500 just hit a 4-hour fair value gap consequence encroachment, which lines up perfectly with the blue zone, not a coincidence. This was my low-hanging fruit in this area, even though it's less than 1 to 3 or even less than 1 to 2. Just got to proceed with caution. As mentioned before, the inside the range models are quite erratic, so you have to have even more safeguards in place. So remember, there's a 80% chance that as soon as we get a confirmation, we will get a retracement back into the range. So this market could still come back, dip down here, tap this purple zone and this fair value gap. Although this candle did dip into the range and move up. Pretty big divergence today. We don't even have a confirmation here on NAS, and we're still below the DST high and low. Huge, huge divergence. Look how much of a buy model this is, and how much of a sell model this looks like. That's why this is my low-hanging fruit, the midpoint, right at the 4-hour fair value gap and right in between the blue zone and the DSD low. I personally would have closed out a position here at the blue zone. Doesn't mean the market can't just push right through and go right up here, but you got to play it safe. Never get greedy. I've said this a million times. Just because we know where the market's going doesn't mean that we should wait for it to catch each and every single pip. Always aim for the low-hanging fruit. That's safe. Think about this. Here's another way of looking at it. So you hit your low-hanging fruit, you cash out for the day. Or at least roll your stops and take close out half your position. Then you're in a safe trade. That way you can wait for it to ride, or you can just walk away. Set your TPs and walk away. You don't have to sit there stressing out. But when you don't roll your stops and take some off, then you could watch the market dip back down, possibly put you in negative, and then slowly crawl back up. But it can be excruciating to watch something like that. So remember, our goal is to get to 2R as quickly as possible, roll our stops, and take some off the table, which I would have done right at the blue zone as soon as we hit the 4-hour fair value gap divergence. As soon as one pair hits a higher time frame PD array, a 4-hour fair value gap, which we did right at the midpoint, you got to treat this one as if it did as well. Secure your position there. 1.57. So let's just jump back up to the 4-hour for a second here. Again, there's your 4-hour fair value gap slash volume imbalance. We could get a reaction off of this. Now there is no other 4-hour fair value gap here, except for down here. This is why we want to proceed with caution. Remember, today is Thursday. Thursdays, we do usually get a retracement, and it's usually back to the weekly range. There's the weekly range. NAS has already hit it, that aqua line. That's why you want to proceed with caution. That's why I personally would be finished already at that blue zone, at that 4-hour fair value gap. It's not a 1 to 3, I'll admit. So maybe I wouldn't have taken it at all, but if I was in a position from here, I'd only want to be taking it to the blue zone. There's still some confluence to the downside. Our weekly range is down here. US 500 hasn't hit the weekly range. We hit the 4-hour fair value gap. So although we have a bullish confirmation, I'll move this down here for a second. Let's see if we get a double break. Remember, we cannot sell this market, especially if we cross that line. If we cross that line, we close above it, then the market could potentially push right past it. So we already have a double break. But remember what happens after a double break. We retrace back into one of our key zones. That could be the purple zone, the 20 EMA, which falls in suit with our bullish confirmation. So there could be still a lot of gesticulation before we punch past this, which makes for muddied waters. One minute, 34 seconds left. I want to see if we close above this green line. That means we could have a retracement and then a punch right past this 4-hour fair value gap. Right now, NAS is still the weaker pair. In a divergence, when you're looking at divergence, right before you get this reversal, you want the weaker pair to slowly become the stronger pair. So even though we keep taking out highs on US 500, NAS is still having a tough time taking these out. So only when this actually truly becomes the stronger pair, and again, it doesn't have to take out all of this in order to become the stronger pair. It just has to show you that it's becoming stronger by taking out the previous candles before it. So until you see that shift in momentum, we won't really see either of these two push. And US 500, we're still waiting for that retracement back to the key zone. We're 26 minutes left in our stream. So hopefully whoever entered that got out here, or at least secured their position. So we've closed above it. We've violated this 4-hour fair value gap now. Still looking for a retracement, but now the percentage chance of us pushing past this point are higher. The chance that we'll go all the way up into here are higher. So again, we're still waiting for a retracement. Otherwise, you can compare this to a runaway market. Also, NAS, the weaker pair, has not yet become the stronger pair. You need to see both of those things happen before this thing actually pushes up. Otherwise, it's just trying to catch people in FOMO and then drop it. So we can jump into this 5-minute fair value gap or this one. Touch this purple zone, hit the 20 EMA, and then push up. So I want to see at least touch the 20 EMA. Even though we're bullish, green across the board, we're still waiting for a reaction on NAS and no real retracement after our double break and after our confirmation. We have not touched the 20 EMA. The original crossover was down here. This was an earlier retracement, but still want to see it come back and touch the 20. This is what I was talking about. NAS coming back down into this 5-minute fair value gap. US 500 still stuck at that 4-hour fair value gap. I want to see a proper drop. About 14 minutes left in our stream. Three minutes, 27 seconds left in this candle. Let's see if we get an immediate rebalancing candle here. Again, a lot of divergence. When you're up against a 4-hour fair value gap and the other pair is still weaker and unable to even get past the blue zone, you got to proceed with caution. That's why I'm looking for at least a drop from here, then this one to get stronger, so they both push up. One minute, 42 seconds left. It's a little over 10 minutes. Still not really seeing the signs. We didn't really get an immediate rebalance here. What we wanted to see was an engulfing candle. Just going to mark out this 5M fair value gap. This could be the drop we were looking for. Let's see. I want to see this drop down to the 20 EMA at the very least, maybe even the purple zone. And I want to see NAS stay above this fair value gap and become the stronger pair. That'll be a good indication that this thing actually wants to push up. Because this late in the game, we're sitting well below New York Open. New York Open hasn't even been touched. It's not a good sign. So we slowly have NAS now becoming the stronger pair. NAS takes this high out. Could be seeing that shift and that push up. 4 minutes, 21 seconds left. So this is our last candle. believe we just, there we go, we just took the highs. So there's a high probability now that we're going to run most likely into the NYC fair value gap up here. But as mentioned before, play it safe. We do have an inside the range model. A lot of divergence. That's why I wasn't keen on anything past the DSD low. That was my highest target for the day. 3 minutes left. Please check us out on fractaleffects.com, where we teach high probability trading. Fastest, easiest system to learn. You can learn this thing over a weekend. Practice for 30 days in a demo account. You're good to go. And just join us on the live streams. We hold your hand, walk you through the whole process. Cheaper than a gym membership. There's that push. Please hit your turn on your notifications and hit the subscribe button so you know when we're live. We'll be live again tomorrow. Next week, Monday. Tuesday. Tuesday, Wednesdays, and Thursdays. So US 500, as soon as this candle closes, most likely making a run for the all-time highs. And we could get a push all the way into the New York fair value gap on NAS. One minute. So your homework, make sure you come back and check. See if it ran up into here. If all the confluence matched, got to continue to practice this back test on your own. That'll be our time. See you guys next week.